Welcome back. Well, Bitcoin and other cryptocurrencies are sliding today as investors really take a risk-off approach. How long could this risk-off mood last? Well, let's find out. We're joined now by David Grider, Fundstrat's lead digital asset strategist. So, David, I was reading through your notes, and you remain bullish on cryptocurrency. Tell us a little bit more about why, and do you think some of these dips that we're seeing right now are buying opportunities, or do you think that for Bitcoin, for example, we could see it sink even lower?
Yeah, first of all, thanks for having me. I think that, the first thing investors should be thinking about kind of in the current market that we're in right now is, we're going through a phase where, crypto is digesting some gains that it had during 2020 and the first part of 2021 that were pretty stellar relative to most other assets. And I think that this kind of retracement has been kind of part of a digesting of those gains. And we're in a consolidation phase right now with the market seeing, working through some of the negative headlines that we had earlier in the year and in kind of a choppy sideways market. Some of the things that we've seen recently are, the market has been kind of on a little bit of lower volume in the summer doldrums a bit. We think there's been a little bit of sell in May and go away type of investor attention kind of looking elsewhere and kind of taking their eye off of crypto lately. But we think that the fundamentals are still strong on crypto over the long term, and it's kind of a generational investment play that we're very optimistic about.
So curious to know, as you're talking about, Bitcoin really retreating from some of those highs, where do you think we are right now in the Bitcoin cycle? Now, your note mentions that we could be at heading into a fourth cycle, or do you think we're at the beginning of a downside trend, or do you think that there could be some continuation to the upside here?
Yeah, I think that is the big question that a lot of crypto investors have on their minds. To recap for folks who maybe haven't been following the space as closely as others, Bitcoin and crypto they're like emerging market digital economies. And most economies, they go through kind of boom and bust business cycles and price valuation cycles for many of the assets. And we've gone through a few waves of those cycles, and they really do have a lot of relationship to the macro environment that we see as well, and they kind of translate around kind of what's happening in the global macro economy. So if we look back to like the prior cycle, for example, there was a mid-cycle pause back in 2017, kind of through the middle of the year, where we had some healthy retracements. It's kind of like we had now. And, I think that the question on a lot of folks' minds is, was this kind of the end of 2017, December, end of that cycle to a bear market, or was this kind of a mid-cycle pause? And I think that the things that folks should be considering and thinking about when kind of making the judgment are, one, I think this cycle drawdown in this recent months was a little bit amplified due to some of the things around the way the market structure has changed with a little bit of increased leverage, some negative news that had happened with, China, but we're also seeing similar things to other asset classes. So like we've seen with some of the cybersecurity news in the recent IPOs, right? And I think that the other part of it is that most important is really what happens with the macro picture and how does that kind of shape up through the balance of the year. And that should be kind of the main driver in our view.
All right, so we're halfway through the year now, and I was looking at some of the price targets that you had. They were pretty aggressive for Bitcoin and for some of the other cryptocurrencies, and we are far away from some of those price targets that you have. And we've also seen some huge slides backwards away from those run-ups that we've seen so far this year. So now that we are at the halfway point of the year, has anything changed in terms of your outlook for the remainder of the year, or perhaps even in some of those price targets that you have?
Yeah, just to give viewers a little bit of back context, we've been at buy on Bitcoin since March of 2020, kind of following the COVID sell-off, and that was around $5,000. And we've been also recommending overweight on Ethereum since around then. And I think the most recent price targets that you're referring to are our current $100,000 price target on Bitcoin and our 10,000 price target on Ethereum. We've been raising our targets kind of along the way as the market has moved higher. We most recently raised those back in January with our January outlook, and we got about halfway or a bit farther for both. And we've had a bit of a pullback since. And I think that if we're kind of evaluating the picture right now, we're maintaining those price targets for year end. I think that as long as the macro picture kind of stays healthy, I think that's going to unfold as many of the folks watching the market are watching it unfold. And that's things like what happens with the Fed, what happens with global risk on assets. As long as those things kind of stay healthy, I think that the picture could be intact for kind of Q3 being a healthier bounce for crypto.
So I do want to ask you, David, just because we've seen a lot of sell-offs, every time Elon Musk tweets, anytime we hear China essentially wanting to crack down on Bitcoin or new regulations on cryptocurrencies. I'm curious to know if you think some of those bad headlines are really going to abate as time goes on, or, how should investors really be thinking about cryptocurrency, given that we see these volatile price swings every time a bad headline comes out?
Yeah, I think the first thing to keep in mind is crypto certainly is a volatile asset. I mean, it's, these are small digital emerging market economies, and like many, smaller economies, very susceptible to capital flows. I think that some actual interesting change in the market dynamic that we've seen recently is, since kind of the end of Q2 and kind of into the most recent weeks, we had been seeing negative headlines taking the market lower, and that had been really driving a lot of some fear and some selling in the markets. We saw things like China and Elon Musk, as you mentioned. But the interesting dynamic that has kind of shifted over recent days and weeks has been that we've actually seen some negative headlines coming out around some regulations and continued things happening in China. And we've actually seen the market start to actually be able to rally on those types of negative headlines. And that's really kind of a shift in sentiment. It might also be a sign that you've kind of seen seller exhaustion from the folks who are maybe have a higher tendency to sell with these types of headlines, these types of news. So I think that is encouraging. I mean, we are in a little bit of a lower liquidity period. It is kind of the doldrums of summer in terms of volume. So the market is a bit more prone to some volatility. But I think that that is kind of one encouraging thing that we've seen kind of start to change over recent weeks.
All right. David Greider, Fundstrat's lead digital asset strategist. Thanks so much for joining us.